My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. I'll be with my friends. I'm just trying to make you a little money. My job is not just to entertain, but to educate and teach you. So call me at 1-800-743-CNBC. Tweet me at Jim Cramer. Nope, not at this level. I'm talking about how the S&P 500 roared all the way to 6,000, practically in a straight line, because buyers were everywhere. And sellers, they were nowhere to be seen. That's how we get another good day. Dow gaining 260 points. S&P advancing 0.38%. NASDAQ gaining 0.09%. And all the major averages closing at new record highs. It was another amazing session, at least if you're a bull. I have said it several times this week, and I'll say it again. This is, ladies and gentlemen, a historic move we are witnessing, fueled by an election where voters chose a candidate who's pro-growth, pro-higher stock prices, pro-lower interest rates, and pro-lower taxes. Love him or hate him, Trump is the most explicitly pro-stock market president in history. Now that he's won, that's paying off in a host of sectors. Yesterday was tech, today oil, drugs, consumer products, financials. These moves are spectacular because they're driven by money managers who are terrified that they won't have enough stock in their portfolios, so they won't sell. At the same time, we're about to see a wave of takeovers as the antitrust regulators will stop trying to block every deal under the sun because a new broom is going to sweep clean. I know some people will say Trump's agenda mainly benefits the wealthy. But look, we live in a democracy, and he got a clear majority. This is the outcome the voters wanted. Even if it's not the outcome you wanted, you might as well take advantage of this incredible stock market. It's not closed to you. Sure, it's easier for the rich to invest. I'm not denying that. But anybody who's willing to save some money can own some stocks. Now, this Trump rally won't last forever. Nothing lasts forever. And it doesn't hurt that the Fed blessed us with a quarter-point rate cut that was finally able to push the bond market in the right direction. That's some rare octane thrown on this fire. But the question is, can the fire continue next week? Well, that's a tough question. I'll tell you why, because we were up so much. Well, why don't we do this? Why don't we just look at our game plan, make some sense of it? On Monday, we have Monday, but this time it's Monday.com, reporting in the morning. Now, this is an Israeli software company that streamlines workflows and provides visibility to what people are working on at your business. There's a ton of companies just like it. It's a quintessential enterprise software play, which is why I'm starting the game plan with it. Because this group, this enterprise software, they were being sold relentlessly. Somehow, sellers just walked away from these companies, which is how Salesforce or ServiceNow were able to soar during this period. I think these enterprise software stocks have much more to go because there are just not a lot of sellers here. They are as blessed now as they were cursed not that long ago. Did you see Salesforce today? Tuesday's huge. All right. First CNBC investing club named Home Depot will report. And this is the quintessential stock to own when Fed's cutting rates. Always has been, always will be. I remember since 1988, I've been playing rate cuts with this one. I'm looking for the despot to raise numbers, given that we're headed for a lower interest rate environment. They could forecast the first real growth in years. In this tape, the stock, which looks like it's up, could head up much higher. Now, we hear from e-commerce facilitator Shopify, and I got to tell you, this last quarter had what many people thought was too much spending. I say when you have a flood of business, you have to spend to be able to handle it. I think we'll see the fruits of Shopify spending this quarter. Lots of people want to know why food prices got so out of hand in the last few years. You know what? You want to learn? Why don't you listen to the Tyson Foods conference call like I will? You'll get a ton about pricing, and they're the dominant player in meat and chicken. Sometimes you don't listen to a conference call to pick a stock. You listen to learn. I learn from Tyson. After the close, Spotify, not Shopify, Spotify reports, and that stock's up more than 100% for the year because they keep raising numbers beyond even the wildest of analyst projections, and I bet they can do it again. You know why? Because people regard it as a bargain. It's kind of like Netflix. This is a bargain, bargain, bargain. Remember, this rally is predicated on a non-hostile bond market. Data can change the bond market's mood. And Wednesday morning, well, we got to worry about this thing. This is a potential mood changer. It's called the CPI, Consumer Price Index. A super hot reading could put a damper on some of the buying that we've been having. I'm watchful. CyberArk reports Wednesday morning, and this is an exclusive cybersecurity company that guards what's called the keys of the kingdom, of the digital kingdom, that is. I think it's put up some great numbers as cybercrime shows no signs of abating whatsoever. How terrific is this sector for stock performance? You know that we own both CrowdStrike and Palo Alto Networks for the Travel Trust. They do compete, but there's so much business going around, you got to get in them. We like Palantir here, too, even as it skyrocketed. No denying that. Cisco seems poised for breakout, doesn't it? Now, this is the CSCO kind of, the network of choice for all sorts of AI and non-AI users. Ever since Cisco bought Splunk earlier this year, it's been able to offer a cornucopia of analytics. That's a powerful combination and one that can surprise to the upside. Thursday, we hear from Disney. Now, there have been so many good things happening at Disney, but they keep being obscured by weaker theme park numbers, which I think will get stronger. The company's expanding its Disney Cruise Line business. That's really what I'm focused on right now. New ship is about to have an inaugural voyage, as well as several more behind it. Can the cruise expansion actually move the needle, though? You know what? As it gets bigger, the answer will be yes, and it'll be a profitable needle. Now, I got this survey this week showing that the CNBC Investing Club members love our monthly club meetings, where we set the agenda for the near future of the Travel Trust. Jeff Marks and I sit down. We do a video. It's a big video. We host one of these meetings at noon Thursday. You can still join the club, get in our hour-long meeting. It's been the highlight of being a member. I'm just passing on what I saw from the survey. Thursday after the close, we have results from Applied Materials, AMAT, which is widely considered to be the dean of the semiconductor capital equipment industry. I actually love Lam Research, too, I should say. Now, I think this group's been falsely accused of weak demand because of this outfit ASML, which did a real horrible job explaining the story. Hopefully, Applied Materials can clear things up when it reports. The semis have been weak of late in an otherwise generous tape. Maybe Applied Materials can change that dynamic. Finally, Friday morning, Alibaba reports. I've been adamant that if you want to invest in China, you need to buy shares of Alibaba because it has Western financials and it's a legit, monstrous online retailer. We know that the Chinese consumer is hobbled when it comes to luxury goods, and there seems to be a sense of listlessness in that populace. That said, Alibaba does a ton of business and makes the numbers pretty routinely. It's the Amazon of China. You need to know that I'm not recommending anything in China. Not here, not anywhere, because I think the economy is a train wreck there. And the government stimulus efforts have proven ineffective, including today's multi-year $1.4 trillion local government bailout. Yet another plan that won't put money in people's hands. People that are dealing with a deflationary environment, they need to have money, which is so desperately needed if China ever wants to return to growth. So many people think they missed this run to 6,000. You know, that S&P 6,000, of course I'm speaking. I say you need to look at things sector by sector. Today, tech took a breather. Breather was worth buying. Maybe Monday, restaurants cool. I don't know. Hardline retailers roar. Then we might go back to the financials and then the industrials. It's an incredibly bullish, virtuous circle of gain. Look, I know that stocks performed very well under Biden. I know people are saying, hey, well, why doesn't he mention that? I just did. But Biden sincerely didn't care much about the stock market. It was an abstraction for the gentleman during his 4 years in the Oval Office. That's no longer the case. So here's the bottom line. Stocks are about to have a champion in the White House again, even if you might think they aren't worthy of a presidential supporter. I say get used to it, even though the buying started already, because we got a lot more room to run. John in Kentucky. John.
Hey, Jim, my friend, and I consider you a friend because you've been coming in my home living room for the last 20-plus years. But anyway,
well, thank you, and I hope I can return the friendship. What's going on?
Well, I bought a stock, Lilly, back when they came out with their weight loss drug, Manjaro, pretty much on your recommendation at the time, I think. It wasn't long after. But I bought it as a trade, and I more than doubled my money. It had a little better.
I love that.
Your words, but now I'm in a dilemma. Do I sell it because it's met all the criteria for getting rid of a trade, or do I hold it?
Okay, I went over today. David Ricks, I said he should do a do-over. He's the excellent CEO. I hate being harsh about a man I think is so excellent, but he didn't explain the deal very well about what happened with Jaro's sales. He's gone around and he's starting to make some calls, starting to talk to the investment houses, and I'm getting a better picture that just says the demand is incredibly strong and a lot of new tests coming out. That's why the stock was up 34 today, and that's why I think you got to stay in it. And thank you for the kind comments. Max in Illinois. Max.
Hey, Jim. Apologies in advance for the pun, but are we checking in or checking out of Airbnb?
No, we got to stay at Airbnb. Here's the problem. Airbnb, one of its worst... I don't want to be critical of great business people, but Brian Chesky has a disappointing habit of always telling you that things aren't going to be as good in the future. That's because he's humble. That's because he runs scared. I like that, but I would temper it with a little bit of enthusiasm about how something could go right not just things go wrong. Brian, don't take that too personal. It's what I believe. How about we go to Mike in Ohio? Mike.
Hey, Jim, how are you this evening?
Real good, Mike. How about you?
Good, good. I got a question for you regarding Chevron. I took a pretty heavy position in December of 23 at 142 for the dividend play, but more than that, the equity. I'm not real happy with the equity position right now, equity appreciation.
Well, it has been the underperformer in the group, which is a shame because Mike Wirth is a good man, and it is coming back. And I like the stock here. EOG had some very good things to say today, which made me feel that maybe things are turning up a bit. But look, you compound that dividend. You go with Mike about what he's doing in the Gulf of Mexico and what he can do with Hess. And I think you'll find yourself with a very good long-term story. And there's nothing the matter with long-term. All right, the buy-in stocks has gotten off to a strong start already. But I say there's still a lot more room to run. Oh, man, tonight. Is more growth brewing for Dutch Bros since popping to the 52-week high on its latest support? I got this coffee chain's top brass to learn more. Then shares of Sweet Green SG fell almost 20% on earnings overnight before bouncing back to end the weekend in the grain. I'm checking in with the CEO, and don't miss a special Mad Money tradition ahead of Veterans Day. Some outstanding West Point cadets are joining me to ask their stellar investing questions. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.